I can't believe Pfizer stock is trading at 7 times earnings. 7 times earnings. I said it in one of my posts, and to me, it's really crazy. I mean, I remember when the stock was trading at 12, 13, even 15 times earnings, when it was yielding a 5% dividend, and people believed the dividend was high. Now the dividend is 7.5%. Very high dividend. Well covered, by the way. So I'm going to talk about Pfizer, and I'm seeing Pfizer the same thing that I saw with BTI, which is British American Tobacco last year. To me, it's the same setup. And BTI was another stock that had a high dividend yield, almost 10%. It was very hated, almost no revenue growth, and people believed the company was a bad investment just because it wasn't growing in revenue. Same thing with Nestle. People thought Nestle was a bad investment just because revenue growth wasn't there. But those stocks are up so much for one reason. And I believe Pfizer is setting up for the same thing. And it could potentially make another, you could say, Nestle or BTI-like move in 2026. I'm going to tell you why, and I really hope you enjoy it as always. Now, for Pfizer, the last quarter wasn't impressive at all. Primary care went down 20%, specialty care up 6%, oncology, which is growing for them. They're leaders in oncology, especially with the acquisition of Segan. It's up 7% on growth. It's really not the best, but really not bad at all. We look at earnings, massive beat, 92 cents versus 66 cents expected. They did miss on revenue, but the company is beating on earnings because they're finding so many savings. I mean, the company was mismanaged. They spent a lot of money on things they didn't need and are finding a lot of cost synergies. The total synergies are expected to be $7.2 billion by the end of 2027 through many things like cost realignment and some kind of manufacturing program that will lower their cost and research and development, $7.2 billion in savings. So the company doesn't really need to grow in revenues. As long as they can grow the profitability for a while, it's going to be an amazing, amazing story. But this company is facing a lot of headwinds. One of those headwinds is the potential tariffs on pharmaceuticals, and they did announce tariffs on pharmaceuticals. But this is what happened on the last report. It says, unlike other companies grappling with evolving trade policy, Pfizer did not revise its outlook. Very interesting. They said included in our guidance that we didn't really speak about is there are some tariffs in place today. We are contemplating that within our guidance range, and we continue to again trend to the top end of our guidance range, even with those costs to be incurred this year. So even though despite the tariffs, despite everything, Pfizer still believes they can get on the top of their estimates. And this is a very different language from what we heard from NVO and from what we heard with many different companies. So Pfizer, yes, the chart is bad, but the fundamentals aren't as bad as many people believe. The second headwind the company is facing is the negotiations of drug prices. And there were some negotiations under the Medicare program of the Inflation Reduction Act, and it will hurt sales by $1 billion, dampening growth by approximately 1.6%. So despite all those things, Pfizer is still holding up very well, at least in terms of financials. Another, you could say, headwind on the stock, and this is a big one, is they're facing massive cliff of patents expiring over the next few years, 2025, 2026, 2027. Many of their legacy drugs, legacy patents, they will be expiring in the United States, in Europe, and in Japan. And the most well-known one is Eliquis. Eliquis, I believe, makes up 12 or 14% of their revenues. This is a big one. Eliquis is going to expire in 2026. And this is a pharmaceutical business. It's a tough business where they have to keep reinvesting in research and development to come up with the new drugs to offset the effect of the previous drugs. And this is how Pfizer has been operating, NVO, Eli Lilly, although Eli Lilly is a little bit different than NVO. But this is how Pfizer and Bristol Myers and most of those companies operate. And then the company right now is investing a lot in research and development to come up, and they do have a major pipeline that's coming along, and it will most likely offset and even exceed the impact of those patents expiring, which is what the CEO said on the call. Now, if we look at their capital allocation, they love returning value to shareholders through the dividend. They spent $2.4 billion on the dividend. The dividend right now, if you look at it here for the dividend alone, it is around 7.5%. Now, anytime you see a 7.5% dividend or 8%, you have to believe that this is unsustainable and there will likely be a dividend cut. But I'm personally not seeing it with Pfizer. Pfizer. I'm seeing a 7.5% dividend, but the free cash flow yield is 13.7%, almost a 14% free cash flow yield. So this is almost a 50% coverage ratio of the dividend to the free cash flow. Now, if you look at Yahoo Finance, they're going to give you the coverage on earnings per share, which isn't really the actual profitability metric. You have to look at free cash flow payout ratio. If you look at the free cash flow payout ratio, it's very well covered, and revenue isn't expected to go down over the next few years. It's expected to flatten for the next few years. So they're going to offset the old drugs for the new drugs. And they're also expecting free cash flow expansion due to the $7.2 billion in cost savings. So this dividend, in my opinion, is not really going anywhere. Now, why did I say that Pfizer is looking a lot like BTI and is looking a lot like Nestle, but mainly BTI? BTI was extremely weak before 2025, mainly in late 2024 to mid 2024, because the company couldn't really do buybacks. So they stopped doing buybacks. Why did they stop doing buybacks? Because they had a lot of short-term obligations, debt obligations that they had to pay, so they couldn't really pay the dividend. Then later on, they resumed the dividend. And once they resumed the dividend, the stock started getting bid up, and it went up in a major way. It's almost 41%, 42%, other than the 10% dividend, which you could have locked in on British American Tobacco. Now, I'm not saying this is the only reason why it has gone up, but it's one of those reasons. And I've seen it with not just BTI, but with many different stocks that I've watched before, where they bottom whenever they resume the buyback program. The buyback program right now is not in place. As you could see here, there's none completed in 2025. Why? Because the company is focusing on deleveraging the balance sheet. Why? Because they have a lot of near-term maturities. In 2025, they had a lot of debts, they had to pay it off. 2026, the company has around $6 billion of debt. They will have to pay it off for 2026 this year. Now, what's interesting is 2027. 2027, they only have $980 million of debt due. So this is not a lot of debt, which is why I believe into mid-2026, Pfizer will likely resume the buyback program at least until 2028, because there's really not much after that. I mean, 2028, they have 5.6 billion. 2029, they have 1.7. But the big one is right now 2025, which they paid off, and they have 2026, which is 6 billion. They're paying some of it off right now. They're going to start paying it off. Once they pay off the 6 billion, then they don't have much really due before 2027, 2028, which is why I believe even later this year, or at least in early 2026, Pfizer will most likely resume the buyback program. And I think that's going to be amazing on the stock. Is going to have an effect in a positive way, in a major way, in my opinion. And you look at the stock is trading at 7.9 times forward earnings with an average of 13 times. This is extremely cheap. If we look at the free cash flow yield, which I believe is the most accurate metric to value those stocks, if you look at the free cash flow yield, it's almost 14%. The average free cash flow yield is 8.2%. So let's assume Pfizer does not grow in free cash flow. It does not grow in revenues. It just stays the same. So it does nothing. You have the 14% free cash flow yield. This will likely be your annual return, which is around 14%. Now, the company could get a multiple expansion on good sentiment. It could go back from 14% to 8%. This is massive, around 80 to 100% on the upside, just from a multiple reversion back to the average of around 8 times or 8% free cash flow yield. But then you're also locking in a massive dividend, which is around 7.4 or 7.5%. So to me, Pfizer over here is kind of looking like what BTI was looking at back in 2024 when it was trading at a almost 18% free cash flow yield. It had a dividend of 10% dividend yield. And it was so cheap, people skipped it because it wasn't growing in revenues. But you don't really need revenue growth sometimes for those companies to play out. You need the right sentiment, you need the sentiment change, and you need some kind of a bottom on buybacks and a bottom on good valuations. And I believe this is how Pfizer is looking at. So I still don't believe Pfizer is a trap unless something major happened with the Trump executive order. But many people are saying, and even though stocks went up on the news because they believe it's not gonna pass. Like it's not sustainable. It's not gonna happen. But if it did happen, I don't know the exact effects that it would have. But, that's what I'm saying. Outside of that, Pfizer to me is looking very good. The the stock continues to go down, but I'm seeing many different things that are improving with the company, and I'm seeing a potential buyback program into 2026, which is likely cause a massive change in sentiment, as now there's some kind of a bid on the stock, and normally those stocks bottom out and they go on major moves whenever you have a buyback program that was reinstated. So this is why I'm liking Pfizer very much. I still don't believe it's a trap. I could be wrong. I've been wrong, but we'll see what happens. And that's just my opinion on Pfizer, not financial advice. Hope you enjoyed it. If you did enjoy it, please press the like button and maybe consider subscribing. So I'll talk to you in another video.